Hi everyone, welcome back to Jack Reddington's channel. Jack's away this week, convincing a panel of Ethereum developers to accept gas fees and donuts. So it's your favorite stand-in host, Sophie, keeping the wins rolling. If you like practical strategies that help you squeeze more profit from the market without adding unnecessary risk, hit that like button and subscribe so you don't miss the next one. Today we're tackling something a lot of traders struggle with: re-entering a winning trade. You close out a position, take your profit, and then the market keeps going in your original direction. You want back in, but you're worried about chasing the move or getting chopped up in a pullback. So how do you re-enter with confidence without turning a great day into a frustrating one? That's exactly what we're covering today. Quick reminder before we get started. This video is purely for information and entertainment. It's not financial advice. Always do your own research and speak to a financial professional before making trading decisions. With that out of the way, let's talk about why getting back into a trade can be tricky. The first thing you need to understand is that this can be a dangerous move if you don't handle it right. In short-term trading, especially with high leverage, it's easy to let FOMO push you into jumping back in too soon. You see another candle in your direction and you think, I knew it was going higher. But without structure, that re-entry could be right before a retracement that eats into your earlier profits. So step one is to have a clear trigger for re-entry. And it's still moving is not enough. You want to wait for the market to show you a reason to get back in. That could be a retest of a previous support or resistance level. It could also be a fresh green zone signal that's aligned with your original trend. Or it might be a clean consolidation break in your direction after the market takes a short pause. But whatever it is, it needs to be something palpable, something you can see, something you can feel. It should be the kind of evidence that lets you confidently say, yes, it's a good idea to re-enter. Step two is adjusting your position size. You don't have to go in with the same size as your original trade. In fact, sizing down on a re-entry is often the smarter move. It lets you participate in the continuation without risking a big drawdown if the move stalls. The next one is controlling your position actively. When you re-enter, you're working with a continuation move, so treat it like a shorter, more tactical trade. Have a clear idea of where you'll take partial profits quickly if the move runs, and where you'll decide to step aside, or use recovery strategy if the market hesitates or structure changes. The goal here isn't to babysit the trade for hours. It's to catch that extra leg while protecting the profits you've already made. Last but not least, not every continuation is worth re-entering. If your original trade captured the bulk of the move, the remaining distance to the next major level might be too small to justify the risk. This is why it's so important to measure potential reward versus risk before hitting that button again. And remember, sometimes the smartest re-entry is simply waiting for the next high-quality setup. You don't have to be in the same move twice just to prove you called it right. The market will give you plenty of chances. The discipline to pick the best ones is what keeps your account growing. If you found this helpful, give the video a thumbs up, subscribe for more trading tips, and tell me in the comments how you approach re-entries in your own trading. Thanks for watching. As always, trade smart, stay patient, and make those green zone setups count. Oh, and Jack, the wins keep coming while you're gone.